What's happening? Happy Monday. Your Monday market update. Sub 4% club is on the move. Okay, you guys, do you remember those magical mortgage rates that were under 4%? You know, the ones people used to brag about at dinner parties like they just discovered fire? Well, believe it or not, some homeowners are actually giving up and moving into new construction. Yep, that's right. They're trading in their unicorn rates. They're trading them in for something in the sixes because that's where we are, and willingly, okay? I know, I had to sit down for that one too. But how long can you really hang on to your home? I know you love it, but if you really wanted to move for a long time, how long are you going to wait? What is happening nationally? Rates today are still hanging out above 6%. Not exactly a party, but at least they're not 18% like the 1980s. That's fine. I was just newly built, but I was just newly born, in the 80s. That's fine. Imagine paying that 18% though, okay? And then still having to listen to disco. Although it is a classic, right? Most homeowners are locked in. Over 80%, did you guys know this? Over 80% of U.S. mortgages are below 6%. That is a ridiculous number. So people are clinging onto their houses like it's the last Costco sample of the day. I mean, do you really want the last sample though anyways? Because maybe it's been sitting out for a while and multiple people walked by it. Who knows what's on it, Okay, but some are moving anyway. You guys, builders are sweetening the deals with incentives. If they are move-in-ready homes, they're offering rate buydowns that make a 6% feel like a 5%. And in some cases, depending on your down payment, could be as low as 3.99%. I'm seeing all these emails come through. Maybe free appliances, because who doesn't want a fridge that's fingerprinted by the delivery guys before your kids even get into it, right? You guys, and even cash at closing or upgrades, because granite countertops, and let's be honest, more than likely it's quartz countertops, and lower payments. Yes, please. Here is the math. A half-point rate buydown saves about $178 a month or $2,000 a year. That's basically a free Starbucks habit or your car insurance, depending on how many teenagers you're insuring. And life happens. New baby, new job, I'm sorry, but a divorce, or just one more day of staring at the 1990s oak cabin tree. Sometimes you move, even if the rates aren't perfect. Oh man. Washington State snapshot. Okay, you guys, let's take a look at what's happening locally. Let's zoom in to the local rates here. Okay, so in Washington, the average 30-year fix is about 6.44 to 6.65% right now. So we are in line with the national numbers. Here is the breakdown on why rates differ. National averages, this is a really quick rundown, okay? Like Freddie Mac's weekly survey are just that. It's averages across the lenders nationwide, all right? Local markets, did you know they can run slightly higher or lower depending on competition, operating costs, and how aggressive local lenders want to be? Lender-specific pricing matters too, okay? Two buyers, the same exact profile, could see different rates depending on which lender they use, the loan product, or whether specials like buydowns or portfolio products are offered. What stays the same? All lenders are tied to the same bond market, mortgage-backed securities, so when rates shift nationally, they shift locally too. The trend line is the same. The actual rate quote depends on your lender, credit score, loan type, and market competition. Think of it like gas prices. The national average might be $3.50 a gallon, but in Bellevue, it might be $10.72. I'm just kidding. But in Marysville, it might be $3.35. Same oil market, just different local pricing. There are currently over 150 new home communities across Washington that are offering promotions and incentives. So translation, your neighbor's builder is probably throwing in free upgrades just to get people through the door. Want to know what building costs look like here? Well, in Washington, it's running $300 to $350 a square foot in 2025. That means a 2,000 square foot home will likely set you back somewhere between $600,000 and $700,000 before you even start picking tile. And here's the kicker. With most Washington mortgage holders sitting under 6%, we're seeing the same locked-in effect that keeps resale inventory tight. But builders are stepping up to fill that gap with smaller, more affordable homes, like cottages. The bigger picture, the housing supply is still tight because people don't want to move if it means doubling their rate. But builder incentives and new construction options are giving some home buyers a reason to trade in their unicorn rates. Surveys show that if rates dip below 6%, 40% of buyers say that they would jump back in. Shoot, when it just did like a little drop in rates a couple of weeks ago, it was like all of a sudden you get these phone calls. Hey, the rates dropped. I want to refinance, or I'm ready to buy my home. Or the seller says the rates dropped. Let's hurry up and go find something and put our house on the market. Whoa! But below 5, watch out, because it'll feel like Black Friday at Best Buy or your favorite place to shop. Or as the Godfather would say,
just when I thought I was out, they pulled me back in.
With stainless steel appliances and closing cost credits. Woo! Bottom line, if you are part of the sub 4% elite club, congratulations! You're winning! But if you're itching for something shiny and new, Washington builders are actually making the numbers work with incentives, and in some cases, it's not as scary as you think. That's your update for this week. I'm your girl, Laura, with Laura Sinclair Homes. And hey, if you found these views helpful, please like, subscribe, message me, and maybe even send this to your neighbors, brothers, cousins, sisters, whoever. You know, the one who's been holding off to sell because of their interest rate. Just remember, as much as it's time for buyers to take advantage of the inventory, it is your time too, Mr. and Mrs. Seller. I will leave you with Ferris Bueller's advice.
Life moves pretty fast. You don't stop and look around once in a while, you could miss it.
Same goes for the housing market. All right, guys, hope you have the very best Monday and an even better week. And guess what? I will see you next week.